Yeah, welcome to the chat. So we are going to learn how to identify institutional swing points. The essence of today's lesson is to be able to identify institutional swing points. As we know in technical analysis, which is the study of trends and turning points, swing points are an important aspect in technical analysis as they give an insight into where the market is likely going to turn around. They give an insight into when the trend is likely going to begin. More often than not, these points are very important zones to work with, and mind you, even if you are a scalper, if you are a day trader, if you are a swing trader, a position trader, being able to identify swing points on the yearly chart is very vital to your trading, as it will fortify your analysis. It will give you more clarity and more insight into whichever analysis you want to do on the chart. For the sake of those who are beginners, let us take less than a minute to explain what we have right here in front of us. These are candlesticks on the chart, and in this lesson we are going to be analyzing the chart with candlesticks. As you can see right here, we have a cluster of green candles as the market is in a range, and you can see the market slightly moving up with a cluster of green candles. These green candles, they signify buying pressure. Likewise, as you can see, price rallying down here, creating series of lower lows and higher lows with a cluster of white candles. These white candles, they signify selling pressure. These white candles right here, they signify selling pressure. While a candle that is neither white nor green, like this candle that we have right here in this zone, this candle that does not have a significant color, it signifies indecision in the market. So at all times, the market is always interpreting what is going on to traders, and being able to read candlesticks, you are going to know the language of the market. You are going to know when the market is screaming buying pressure, when the market is screaming selling pressure, and when the market is screaming indecision. So the other aspect we are going to look into is how we are going to be able to identify strong buying pressure and strong selling pressure. Because to know these swing points, we need to be able to identify strong buying pressure and strong selling pressure. There are two patterns. The first pattern is the engulfing pattern that we have here. First, for a good selling pressure, first we want to see buying pressure, which we have here, and the second one we want to see selling pressure, which we have here. This is a very good pattern. We have it right here, and subsequently another pattern like this follows this as well. So this screams good selling pressure, and if it is going to be a buy, it is just the exact opposite, nothing complicated. And if the market wants to scream good selling pressure with the other pattern, we are going to have what? We are going to have buying pressure, then two selling pressure that overshadows the first buying pressure. So these are the two variations. Likewise, if it is going to be a buy, we are going to have selling pressure, then two candles that scream buying pressure. See, this is good buying pressure. And another aspect, this is the market break block, which screams good buying pressure. You see just three candles, and the other one is just two candles. So you do not want to see more than three candles, this selling pressure then buying pressure. You can see how the market bought up. So those are the two patterns we want to identify. So now, how do we identify these patterns to know the institutional swing points for the year? As we know, the institutions, we need to keep a concept in mind. They sell high and buy low. They do the opposite of what the retail traders do, because the retail traders, they sell up. The retail traders, they sell low and they buy high. And that is the opposite of what the institutions do. The institutions, they buy a currency when it is cheapest. They buy a currency at wholesale price and they sell at retail. They buy currencies at discount and they sell at premium. So right here at the high of this particular year, we can see on the monthly chart for 2014, we can see at the high at the top, we have the chart screaming selling pressure, buy candle and sell candle, and you can see this is an institutional swing point at the high. You can see, so you want to look out for them at the perfect high, which is obvious here. And that's very simple, very simple. Another example we can take, you can see right here at the high of this year, you can see at the particular high, you can see this screaming selling pressure, and you can see how price dropped. So it is not complicated at all. it is more simple than you can think of. It is more simple than you can imagine. So you can see, so at the high of or the low, if you do not see the formation, then you ignore it. You can see this is an institutional swing point for a buy. However, the subsequent year price broke it, but you can see for the next 2 months the price bought up. Likewise, right here we have an institutional swing as well. So we are going to take as many examples as possible to be able to keep our eye in, to be able to see these, because we need to know how they form in the inside before they form, so we can leverage on them. You can see right here, selling pressure, buying pressure, buying pressure, and you can see how the market went up. We spotted this at the exact low of this particular year, 2022. So let us go to USD and check. You can see for this particular year we have the institutional swing point at this high, and you can see how market has been dropped. This for this particular year. For the previous year we had it where we had it at this zone, and you can see how price dropped as well. So price printed out this sell swing point here, and you can see it printed it out this year as well. So once you know this, trading is going to be nothing but a cakewalk and a walk in the park. So you can see how simplified it is. You can see this is the swing point for this year on USD/JPY. You can see this is the swing point here. This is a swing point here at the exact low. This is another swing point here. This is another swing point here. So once you're able to identify these swing points, it will be very easy to work with them, and trading will be easier than you could ever imagine. So right here, let's go to the monthly. So on GG, you can see this particular year you have the swing points here. You can see this year price is retracing here. This is the swing high for this year, and this point you have the swing high for this previous year. So this is the swing high for this year, this is the swing low for this year. So swing highs are seen in the high, swing lows are seen in the low, and that is where and when you are going to know the institutions are intending to move an asset to a particular direction. So you can see for this year as well, this is the swing point screaming sell. You can see how price dropped. For this year, this is the swing low. So even ICT cannot teach swing points as better as this. So as you know, we look at the highs and the lows, and we look out for these strong patterns in these zones. You can see the swing high here. You can see the swing low here. You can see the swing high here. Now these swing highs and swing lows, we know that the institutions, the dominant market participants that are comprised of 95% of the market, this is where they key in their orders, and the market more often than not obeys these zones. These are another swing points. So as you can see, Euro JPY for this year, price has made a swing here. For this year as well, price has made a swing. So like this, we are going to be expecting Euro JPY to buy for most part of this year, just inducing from the swing points we can see there. You can see this has not made any significant swing points for the year. You can see the swing points for this year. You can see the swing points for this year as well. You can see the swing points for this year. So with this information, I hope you are able to learn how to identify swing points, learn on your own, mark the charts, and as always, win today, win forever. Plan your trade, trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, share, and subscribe. Follow for more.